The following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to Nick in Tampa. Hey, Nick, what's going on?
Tom O'Brien, it is an absolute pleasure.
Thanks so much, man. We appreciate you calling.
No problem. Dude, I've been listening to your show for about 2 years now, and it has just been wonderful. I listen to you, Basil, Andy. You guys do an amazing job.
Well, thank you so much. We appreciate you growling and prowling out here with us.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. This is a quote is by Robert Brodt. Remember that there is a part of life for which you are the explanation. Market-wise, let's take a look at it out here. We have the Dow Industrials up 75, Nasdaq's down 13, S&Ps are up 3, gold contract down $6, trading at $1,192 an ounce. Silver off 10 cents at $16.19 an ounce. Platinum flat at $1,153 an ounce. Copper down a penny and a half at $2.70 a pound. Light sweet crude up $1.37, trading at $53.28 a barrel. Bonds, we have the 10-year up 12 ticks, 129.11. 30-year up 1 point and 1 tick at 164.16. King dollar down 788 ticks at 98.98. The euro up 86 at 106, and the yen trading down 76 at 119.37. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. In the world of the S&Ps, let's take a look at them, man. We got a lot of information that the market is releasing out here today, folks. If we start with the S&Ps, this is what you have. So the SPY. We take a look at the SPY. The SPY thus far, sideways move out here. You're actually up 38 cents. We've done volume of 56 million. Yesterday you did volume of 74 million. Bottom line, we'll see where this shakes and bakes coming into the close. What we have here is a slow roll. That's what this is basically playing out as. And that roll has to do with right where the market is trading right now. The benchmark on this, folks, is 209.35. And right now you're at 209.44. So what is the correlation? The correlation goes like this. Yesterday, you went over the March 25th high. You had lighter volume. You have a failure. Today, back down slightly, really a sideways movement in all the markets. You close, if we close over the 3.5, guess what? That says, yeah, you can go hit the high again. Bottom line, you close under the 3.5, that's saying we're going back down the other side. Larger picture, folks, is that we're going to October 15th swing low, which is like 182, and we're at 209. So it's a big number. The NDX 100, we take a look at the 3 Qs. 3 Qs out here, they're trading at 107.12. Bottom line, they're inside the March 25th area. The 3 Qs today have done 19 million shares. And this is where it gets subtle, but this is where the information that's getting released from the marketplace today is really cool. So we've done 19 million shares. So what you have is that you had made highs yesterday with 17.8. You're going down with 19. We're going to end up doing probably 21. Bottom line, what does that mean? You got an expansion of volume. Couldn't handle higher price. Qs are going to be running down to this 104.34, running down to 100, running down to the October 15th swing low, which is 90. And, of course, 90 is devastating as to where we are right now because that's 15% down. Gold contract. What do we have with gold? Now, this is where it's going to get wild, and this is why. Gold contract out here today traded down to the price point of 1183.50. Now, volume-wise, we've done the exact same amount of volume as we did in the sign of strength on April 1st. So, what does that mean? Okay. The bearish part is that I never like to see volume expand. So that's bearish for sure. The bullish part is that, guess what? If you have the art of time in the trade, how price and volume move markets, you know that markets don't talk, walk, or squawk until when? Until they're reaching swing points. Guess what? Couldn't get to the lowest swing point. They couldn't jam it. They jammed it to 1183.50. Well, the swing point, folks, is 1180.50. Gold wants to run up into the 1224 level. We'll see whether it's an ABC structure on the way up and takes it up somewhere into the 1280 level. Now, what we do have is this. Now, this is really bullish. And what it is, silver, folks, okay, has been a laggard. Now, what you have out here today, silver is much clearer. What we had with silver is this. Silver had lighter volume, rejected lower price, is inside the range, and bottom line, wants to go higher. Silver's down 10 cents right now. It got to a price point today of $15.95. Your day of strength was $16.08. So the real danger part there wasn't when it got down to that level, is that, okay, man, you're going to stay below that level, because if you stay below that level, the bottom of 15 to 20 is game. No, didn't want to stay below that level. And you came into that strength, and thus far have done 43,000 contracts versus 60,000. That's really positive. You put that together, bottom line, gold, silver, metals, one higher price. But the kicker to put in line with that is good old King Dollar. King Dollar was the first to release information yesterday. Following up that information, what you have with King Dollar is this. King Dollar has come off the highs again with volume. Now, the correlation is pretty intense, folks. What I mean by that is this. The longer that a market goes sideways or stays in channels, and it takes a length of time for that to do it, period, the more information it releases. So when you look at a King Dollar, what you have is this. When we hit a price point of 100.78, that was a 2-to-1 ABC structure on the way up. Anything more than a 1 to 1.618 extension on the way up or down is immediate change of trend. We got the immediate change of trend. We come off the high with volume. Then what do? We come up and we test that high with lighter volume. The kicker out here today, you come off the high with volume again. We've done 64,000 contracts. That's after basically trying to get into a high yesterday with 57,000 contracts. Bottom line, you're going to go after the bottom of the consolidation it's in right now, which is 96.80. I suspect it's going to go after the 94.76 area. That was the high volume swing high from March 18th. The probability that the dollar has topped goes up because of the fact that you've come off twice with volume. Bond market. Let's go over to the 10-year first. Okay, so what do we have with the 10-year? 10-year looks to me like we're going to have something that's really explosive out here. When I say explosive, it looks like it's going to be a ABC structure on the way up. And if that's what we get, what you're going to see is this. We had a huge expansion of volume out here today. Yesterday, you hit lows with 700,000 contracts. Today, you go higher with 1.1 million contracts. Well, the B point on this, folks, that is laying out there at 129.21 has, if I even take the day before it, the B point itself only has 380,000. If I take the day before it, which I should, which is 872,000, if we get one more day like this is all we need. Is tomorrow it comes into that level with that, guess what? You're not only going to go higher, you're going to blow away the January 30th high of 130.20, which is going to bring rates even dramatically lower. We're at 1.895 right now. And when you look at this market, what you're going to see inside the bond market in particular, there is going to be a slew of... There is a slew. Let's put it that. Well, I don't know that for sure. My suspicion is that there is a slew of short positions that will have to be closed that are just going to put a hammering in that market. That's pretty amazing. And let's go over and we take a look. In fact, we'll go look at the TLT because the TLT is on a monster ABC structure on the way up. The TLT, this is a 20-year bond plus fund. TLT today got to a price point of 131.86. You've done 5 million shares, and this is operating like it wants to take it out also. Yesterday we did 4 million shares. You do 5.1 right now. Your B point up there has 5.6. Bottom line, TLT also wants to run up to this 138.50. So we got a volatile market out here. The currencies are basically, I suspect, are going to be running this market for quite a bit. Some of the high volume stocks in this low volume market right now, you have, let's see, JP Morgan Chase, that's up $1.25. You get Facebook up 36. ExxonMobil's up 146. Some of the Dow stocks, we have Boeing up 11 cents. Coca-Cola's down 18. You have Big Blue flat. Walmart is down 10 cents. This is Tom O'Brien. This is TFNN. You stay right there, folks. We're coming right back. Dow Industrials are up 82. Nasdaq's down 10. S&Ps are up 4. We're going to be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, Nasdaq, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC.
Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com. Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. We get the Dow Industrials up 70, Nasdaq's down 11, S&Ps are up 2.5, and as we do each and every Tuesday at 20 past the first hour, we get our man, Mr. Basil Chapman. Don't forget, folks, Basil is a great program right here every trading day, 11 to 12 Eastern Standard Time. All the programming at TFNN, folks, you can get right on your cell phone. We do live programming 8 o'clock in the morning to 6 in the evening. Right on your cell, TFNN.mobi will get you all the audio. You want to get Tiger TV, audio and video, just go to TFNN.com. Hit the banner on the right-hand side. You see a little box that says mobile devices. You'll get streamed right to your cell phone. Basil also a great newsletter. It's the opening call. The way you test drive it, go to our newsletter, go to our website at TFNN. Go to newsletters, trading newsletters, see the opening call right there. Can test drive it 30 days, absolutely free. Basil Chapman, what's going on?
Hi, Tom. How are you?
Doing great. You having a good day?
Very good. Thank you.
And I'm hoping that I'm asking this question, but I'm hoping that spring has sprung up there.
It is beginning to spring and sprung at the same time.
Thank
Absolutely.
God.
Yesterday was a fabulous day, and today's pretty good. So we can't complain. And looking out, it's a little cloudy, but in fact, it's warmed up a lot.
That's good. So what are we going to look at today, Basil?
So I've got the Dow chart right here, and you remember last week I was speaking to you about this pattern. There were two patterns that were fighting one another in the Dow. One is within this down channel. This is the daily Dow chart that I show my subscribers to my opening call every day, and we discuss it. What I was talking about is that we had made lower lows and lower highs, and that there was an arch formation that had formed and went to the high of the 2nd of March at 18,288, pulled back to 17,620 on the 12th of March. Then it bounced back up, made a lower high at 18,205 on the 23rd of March. Then it went down and went lower. It went down to the 17,579 area on the 26th of March. Well, what is interesting about this, it was 15 sessions from that high of the year, 2nd of March, the all-time high, to that cup formation that went all the way to 18,205. Well, as I say, there were two fighting patterns. One was the arch formation and the lowercase h that I always talk about on my show, the show that's at 11 o'clock every day. And as soon as we broke out of it, you had to consider that there was now a cup formation that was reforming, and that there was 15 days to the previous cup lip high, to the second high of the 23rd. So yesterday was the 14th, and the price, the 14th session, made the cup formation. And it's so fascinating. I always say, how does the market know in a diagonal pattern? I understand when it's horizontal, when you're going from, say, a level of 20 and there's a pullback, and money managers know that 20 was the last level. That's easy. But how do you grade to the downside or the upside? And yet, look how the market knew exactly. Right at 18,107 yesterday. I know. The market pulled back.
Right.
It's just remarkable when you see these things. I talk about it on my show, and I do have a theory about it. It has to do with from the lowest low within a channel, it's the same proportion of exuberance or despondency on the way down, so that you can get that match in price. But at the same time, it is amazing when you see this. Now, look what's happened. What I said to subscribers today, the 17,009, it was at about 940 earlier yesterday. This 9-period exponential moving average is really important, because if we close under it, as I say, they're two competing patterns here. If we can close above it, that's very important. If we close below that 9-period moving average, you have to consider that yet another arch formation is forming. So yeah, you've got the stochastic and the MACD doing very well, holding nicely. They're not they're not in very strong territory, but they are moving higher. That's important. And we got that reversal this morning, a very sharp reversal from sharply down to, at one point today, the market spiked, the Dow spiked to 18,075. Right now it's at 18,043. So setting that aside, all I need to say is that if in the next 2 days, the Dow doesn't have to close there, just has to spike above 18,107, that'll start leg C. That'll hint very strongly that we should go to a D as well over the coming days. So I want to move now to the weekly chart. And the other thing that I'd spoken to you about, here's the same thing. I'm moving the daily away and I'm opening up the weekly chart, and you'll see the monthly chart. Within this context, you can see, once again, we've got these arch formations fighting with the cup formations. Because that 9-period moving average of 17,913 is held. The low so far this week was 17,905. Just nicked it, but it has pushed above it. That's a positive. And it's when you are so close to all-time highs, it's unusual not to at least attempt once again to get there. So my bias right now is that there's still enough residual strength to push the market a little bit higher, and that includes the S&P. But when we spoke last time, you remember I was talking about the rotational aspect of this market that I cannot rule out, even though I was expecting that late March into April would be a consolidation period, that we should decline somewhere between 8 and maybe even 10 or 12%. There was a chance that we could rotate once again, so that it was really a sideways move within the context of consolidating and not so much price. And then what happened was, all of a sudden, what did you get? You got the XLE. Look at the XLE here, very strong. This is leg D to the upside. This is a big move for the XLE, but within the context of my longer term chart patterns, there's that H pattern that goes to the lowercase m. I talk about it a lot on my show, and I'd actually already drawn the arch formation here. So this is so far just a bounce in the XLE. We'll see if it can go higher, but it's getting to a resistance point. And then the transportation index, the IYT, that had a very strong decline, but when you look at it in the context of the weekly chart, even the monthly, so far I have to consider that it is a sideways move. There again, you're getting those two cup formations. It's fascinating how these prices just, the patterns repeat very, very often. So that means you've got weak areas that have become stronger, like the XLE and so the XLE, and then the IYT, which is the transport, which is very important, although I don't really subscribe to the Dow theory with the transportation and the Dow itself. The historical relevance is not quite there, but it's still very important that you do get the transport. So that includes the rails, includes the truckers. So you need to see them at least showing that there's some strength. So when I spoke to you actually a few weeks ago, I said, it would not surprise me if we find out that, in fact, we've been in a kind of a mini recession over the past few weeks, and could go on a little longer. And of course, as an economist, one would only talk about this historically. So we won't even find out about whether this was a little mini recession over the March, April, maybe even a little bit into May period, until much later on when the statistics come out. So I'm looking at this and I'm saying, you can talk as much as you want about all these different sectors. The most important thing is the VIX index, and the VIX index is still kind of weak at 13.94. Until we see the VIX index go together on the upside with bad news affecting the market negatively, I have to think that there's enough residual strength to try at least to retest the previous high range. So we're looking at this as a mixed market. Our portfolio in my opening call represents that as well.
And folks, you can come over and test drive Basil's newsletter at TFNN right here, right now. Basil, thanks so much, man. Have a great one. Have a safe one. We look forward to the show tomorrow.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Technomental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
If you're like me, you see the world's emerging nations as a very real opportunity, as these countries and their economies are developing right before our eyes. And you can rest assured that Everbank has spotted this opportunity too. In fact, they just recently unveiled the new 5-year market-safe Future Economy CD. This is a CD that could really deliver, but you only have until May 7th to take advantage. Consider the facts. If the future economy's currencies beat the US dollar over the CD term, you'll get all the upside. And should they lose, no worries. There's zero downside risk here, as you still get back 100% of your deposited principal. Intrigued yet? The May 7th funding deadline is quickly approaching, so hurry over to everbank.com/TFNN-CD for more information, including important product details and disclosures. Once again, that's everbank.com/TFNN-CD. Everbank is an equal housing lender and member FDIC.
Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. 877-927-6648. We have the Dow Industrials up 74. NASDAQ is down 12. You get the S&Ps up 3. And, folks, if you have an interest in options, I'm going to be doing an options course tomorrow night, 5 to 6:30 Eastern Standard Time. The course is only $97. Check it out on the front page of TFNN. It goes from 5 to 6:30. If you can't make it live, it will be on your webpage for an additional 30 days. Now, let's get over and we're going to look at a couple indicators inside this gold market for a couple of our targets. We're going to look at Royal Gold first. Now, here's where there's some divergence, folks. Okay, my take on both gold and silver, by the way, is that they're going higher. But I want to show you how divergence comes in the marketplace, and we'll see where this does shake out. Now, Royal Gold and Franco-Nevada, they both like to trade on the price of the actual physical metal. Okay? Why? Because they're both royalty companies. So what do we have out here? So the first thing we have, which is dangerous for the gold market, is this. Well, for the equities. The equities, I'll go one at a time here. So Royal Gold. What did Royal Gold do? Well, Royal Gold, folks, on the 9th, right there, on the 9th of April, actually took out its swing point, and it took it out with volume. Now, this is where this gets subtle. The swing point that we're talking about is 62.50. That swing point now, okay, was coming, the bottom of that swing point is 62.50 rather. Yeah, 62.50? Yeah, 62.50. We had volume there of 558,000. It took it out, it took it out with, let's see, we took it out with 900,000. Today you're doing 635. So you are contracting today. You have lighter volume. Now, even when it actually came into the area of this 60, or the low of, when it took it out at 61.98, what you had there is that you're coming into the highs of the lows, and you do that with lighter volume. Okay, so what is the divergence? The divergence is like, why can't this equity reject lower price? And it hasn't yet. If we go to FNV, we take a look at FNV. We pull up FNV. What do we have with FNV? Bottom line, FNV is trading out at 48.50. Stronger, absolutely stronger stock. FNV is like, still hasn't rejected lower price though. We're down 50 cents today. Volume's contracting. Bottom line, you want to see this also reject lower price. Now, okay, so both of those have to do with gold royalty. SLW, now let's go into SLW. So SLW is acting the same way, meaning that also can't handle price today. We're down 10 cents. You're at $19. Now, this is coming into its strength from the first. We're at $19, though. It should close at $19.12. Okay, so this is going to get really... the reason I want to bring this up is this, is that there's plenty of gold and silver equities that are acting correctly. These three are a danger signal that, in fact, gold and silver is going to go lower. I brought it up for you. I don't think that's the case. I've seen divergence plenty of times, and they break one way or the other. That's the essence of it. And we're going to see which way that goes in the next few days. The reason that I suspect they'll get juice is the fact of the matter that when we started the program, silver is basically showing that, hey, we're going higher. Gold is close. Gold is real close. The dollar is toast. Okay, so when I put that together, and when you have divergence, that's what you have to do, folks. You try to get as much information as you can, put it together, and say, okay, which way do you think this baby's going to go? So we'll see how that is going to shake out. But there's going to be volatility. That's how this thing is shaking out more than anything. If we go over and we take a look at McEwen Mining, now, what we had to happen with McEwen Mining is this. Rob McEwen, you may have heard him here many times. McEwen Mining, bottom line, got robbed. It looks like it's an inside job, 7,000 ounces of gold. Technically, you want to see this thing test the bottom anyway. What you have is this. The gold market itself, folks, is always dangerous. You have currency risk, you have political risk, you just have risk that the thing wants to go lower. The country risk keeps getting bigger and bigger and bigger. Mexico has always been one of the best jurisdictions for mining. Their middle name is mining. What has happened in far out places in Mexico, however, is that the danger has gone up dramatically. Gold Corp got some people kidnapped. IM Gold got people kidnapped. And in this particular case, McEwen Mining, what came down there is that it looks like it's definitely an inside job. So now they bottom line, what they have to do is that they have to turn around and figure out, okay, how are they going to secure that place? Because what you do have is that the 7,000 ounces is nothing compared to the amount of gold that, bottom line, McEwen Mine is going to take out of that mine this year. So they're going to have to make something like a Fort Knox. The key is, the heads up in all of this is know where your miners are doing business. That's what it really comes down to. We take a look at some of the financials out here. JP Morgan Chase. JP Morgan came out with numbers this morning. They beat JP Morgan. We take a look at JP Morgan right now. JP Morgan is trading at 63.15, but guess what? This baby can't break its highs. I expect what you will see is that this high will get tested again today because we have juice underneath it. The high that was generated December 31st was 63.49. We've hit 63.61 today, so you got over it. And you have the volume. So bottom line, I wouldn't be shotting this thing up here. I'd wait for it to test it one more time. We go take a look at Morgan Stanley. Morgan Stanley, let's see. So JP Morgan came out with his numbers today. Morgan Stanley's going to come out with his numbers the 20th. That's trading at $36. That's having a tough time. That's having a tough time from the downdraft of January. Big numbers on the way down in January. This doesn't look like it's going to get over those numbers at all. We came down with 16 million shares. You're going up with 9 million. Goldman Sachs. We go take a look at Goldman Sachs. GS. Goldman Sachs is trading out here. Kind of looks like JP Morgan Chase. The difference would be, let's see. So Goldman Sachs right now is at 197.60. The high is 198.06. You're at 2.7 million. Oh, this is going to be so cool. This is a close one. So we're at 2.7 million. You basically, you need a lot more than that. You need 3 million, 3.2. Let's see. What are we talking? Now we're talking 3.6. We're talking 3.6 million really to break over those levels. What you have, that's on the daily. On the weekly, it's a heck of a lot more. On the weekly, what we're dealing with is that you're dealing with 20 million shares, and there's no way it's going to do it. So what you want to be doing here is this. Start setting up some of these weeklies, because it looks like Goldman Sachs. Let's see when they come out with numbers. This is a clean double top. This is cool, too, because they're going to be coming out with the numbers on Friday. No, let's say today's Tuesday. No, Thursday. Before the open. Thursday before the open, April 16th. No, that's going to be interesting watching this whole thing shake out, because what you do have here is that you're pushing into those levels. Thus far, on the weeklies, on the weekly, it's going to be dramatically lighter volume. Bank of America, BAC. We take a look at Bank of America. Bank of America is coming out tomorrow. Okay, the 15th. Bank of America can't get out of its way. That's going sideways. That'll pop a little. Yeah, that can pop up to 1660. The way Bank of America, let's put this on a daily for a second. Yeah, Bank of America can pop up to the bottom of its March 6th level. That's how it looks like that baby wants to shake out. If we do go over to the XLF, we take a look at the XLF in general as to what's happening with that XLF. What you have is this. The XLF can't seem to get out of its way. And we know what that's going to be about, folks. Let's go over to Berkshire Hathaway, which is pretty wild, because Berkshire Hathaway is the largest weighting structure inside the XLF now, and more than likely what's happening, yeah, it is. So if we take a look at Berkshire Hathaway, that's down 60 cents from we're trading at 142, the high's 152, and what's happening there is that whether you pull up Coca-Cola, that's way off its highs, that's down. If you could pull up the rail transports, they're getting absolutely smoked. So that's what you have. Berkshire Hathaway just happens to be keeping the XLF flat. This is Tom O'Brien. This is TFNN. You stay right there, folks. We'll be coming right back. Dow is up 69. Nasdaq's down 11. S&Ps are up 3. We're going to be right back.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit tfnn.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Tom O'Brien.
Welcome back, folks, and hey, check this one out. This is pretty wild in the context of where we're at. Now, the headline reads: Americans spending on dining out just overtook grocery sales for the first time ever. What does happen inside of this, though, at the end of the story, when I read this, folks, what the groceries that are not inside here are Walmart and Target, okay, which I'm sure are big numbers. But listen, this story is pretty wild. Past the menu, hold the shopping cart. Grocery stores are finding it harder to make headway with shoppers as a surge in spending at restaurants over the past several months signals Americans are now more likely to ditch the brown bags in favor of doggy bags. Sales at restaurants and bars overtook spending at grocery stores in March for the first time ever, according to the Commerce Department, which released Tuesday. And now that dates back to 1992, but that's pretty wild, and it really is. So check it out. The younger cohort has been identified as being more willing to spend on food away from home, according to the November report. The National Restaurant Association has caught on. The Food Service Trade Association boasts that 500,000 members are focused on how to cater to the army of young folks that are set to overtake the baby boomer generation this year. Now, you know, we were talking about this last year, okay? And we're all onto this in a huge way because we're in this real estate market, okay? Bottom line, folks, you got to wrap your head around this, okay? The millenniums, 34 years old, going all the way down to about 16, are bigger than the baby boomers, okay? So if you're starting a business out there, start a business, or if you're 34, that's the ultimate, okay? 35 is even better. Whatever. Start a business, because it's really hard to lose money inside a business if you're working and you have that slew of people coming on afterwards, okay? That's why you see the folks that are basically very large in companies and corporations in the U.S. right now. What's their age? Their age is like 70, 72. Different ball game. There's work involved, a lot of luck involved, but you know what? It's the statistic, folks. It's the amount of people that come in, and the amount of people come in, guess what? Things go up. Now, at the same time, check this out, because this is pretty intense. When I think about it, and I remember I had a pizza place, and I still love pizza. I love pizza beyond belief. Nico's going to kill me, but I do. So check this out. And this is what they're eating. Millennials view dining out as a social event. Chance to connect. The Restaurant Association advises on their website. They tend to favor fast food, deli food, and pizza restaurants over coffee shops, high-end dining, or casual dining. Their diversity and interest in new things draw them to more ethnic restaurants also. Pizza places are a big deal. There's no doubt, man. I mean, they've been making better pizza, too. At the same time, older Americans have been expressing less of a willingness to spend on dining out while funneling more cash towards those grocery trips. The share of 51 to 69-year-olds who said they're spending more on groceries compared with a year earlier outstripped those who are spending less by 45 percentage points. The share of those baby boomers spending more on dining out was smaller than those who said they are purchasing less at restaurants and bars, 10 percentage points. Now, this is the caveat, okay? And this is why I suspect more than likely grocery stores still are much larger than restaurants, and this is what it is. This data does not include Walmart, Target, and Costco. Costco and Target are huge. I mean, I suspect Walmart is too. But Target and Costco is huge. What it does say, though, is this, is it says, guess what? You can, restaurant business is a good business, folks, if you're looking for a business. A lot of work, but, good business. And this is so cool. You're absolutely right. Oh, man, this is a trip. Man, Mr. Bill in the Tigers Den is saying, the people are buying better food. Yeah, I bet they are, man. I bet. There's no doubt. That's pretty cool. Yeah, we have to buy better food if we want to live, right? No doubt about that, man. Hey, this food thing, there's no doubt, as we go forward, there's a huge education process that we don't get that we should be getting in food. There's just no doubt about that, So we'll see where this, we know where this thing's going to shake out. The bottom line is that the amount of advertising money is still going to basically be pushing people into junk. That's what it really comes down to. Let's go over and take a look at these S&Ps as we're coming into the close. Right now you have we're at 2087.50, and this little, there she is. So this little baby out here, I suspect, number one, it's going to get run down. It's going to run to the 85 right now, and we'll see whether it can crack that 85. Bottom line, folks, each and every time, this is like the record of, I know. Yeah, I want to go over to Google first, because I want to show you something. Google, okay, is getting smoked today, but Google is also an ABC structure on the way down. And Google, was one of the first equities in order to hit the October 15th swing low. And what's happening now is so October 15th swing low on Google was 518. Google went down to 497. That was December. It goes all the way back up to 583. And guess what it's doing today, folks? It's taking a B point out of an ABC structure on the way down. The A point on this is 81. The B point is 35. So we got $50, $45. The C point is 53. And we know what that's going to do? That's going to whack it right under the October 15th swing low again. The B point on Google was 535.8 points. Let's see, 70. We've hit 535.74 today. We've done 2.1 million shares versus 1.6. Bottom line is that Google wants to go south. And this is going to be wild because this is going to be the second time that we're going to see Google down under those numbers. Google's coming out with their numbers on the 23rd of April. We're going to be seeing a lot of numbers coming out next week. Next week is going to be wild inside the market. There's no two ways about that. There's a lot of numbers that are coming out. And, Google says quite a bit. The thing that's amazing, actually, is that, who's going to overtake Google? But you know what? If you've learned anything in life or in the markets, there's always someone better. There's always someone in a competition that's going to overtake it. Yeah, just look at the Masters. The Masters was absolutely fabulous. I mean, that whole deal. And in fact, you know what? We were just talking about the demographics. My take on the golf deal, golf had been going down for years. Golf courses you can buy for nothing right now. Bottom line, I think golf bottomed, and I think you're going to see golf go topside again. It's one of those deals. You get a whole new slew of folks that get some excitement going. You got the divergence that it's all over. And guess what? Nothing's ever all over. Nothing goes down forever. Nothing goes up forever. This is Tom O'Brien. This is TFNN. You stay right there, folks. I'm going to be coming right back.
The following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to Marty in Worcester, Mass. Hey, Marty, what's going on?
Hi, Mr. O'Brien. Got a quick little thing here.
Yeah?
It's called patience and perseverance.
Okay.
Patience. I heard a goddess yelling, the magic silent word, and methinks I must be smelling pokey money round the world. Perseverance. When markets roil like stormy seas, good traders seek safe port. In financial times like these, you need Tom O'Brien's Gold Report.
You are too much, Marty, man. That is so cool. Well, listen, man, I really appreciate that.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. This quote is unknown. Expect the best. Believe something good is going to happen, and it usually will. Market-wise, let's take a look at it out here. We had the Dow Industrials close up 59, NASDAQ down 10, S&P's up 4.5, gold contract down $7, trading at $1,192 an ounce. Silver down 13 cents at $16.15 an ounce. Platinum flat at $1,152 an ounce. Copper $2.70 a pound. Light sweet crude up $1.27, trading at $53.18 a barrel. Bonds, we had both the 10-year and the 30-year up with conviction. The 10-year was up 11 ticks, 129.10. 30-year up 1 full point at 164.14. Both of those folks are going to run to that January 30th swing high. The way the both of them are trading, they very well could be an ABC structure on the way up and blow away those January 30th highs. King dollar down 753 ticks, traded at 99.01. What you had with King dollar is this. King dollar tested its March 18th high yesterday, failed on price and volume, came off the highs today with volume. What does that mean? That means that twice we've come off the highs with volume. You've gone back up and tested the high. That is a change of trend in King dollar. I expect that that top more than likely is in. Euro up 82 at 106.49. The yen down 68, trading at 119.45. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world? If we go to the world of the SPY first, we take a look at the SPY. This is what you have. SPY out here, it's closed today at 209.49. Now, what do you have? Well, guess what? It just snuck right over that 18th again. I mean, the 25th. That's your benchmark. What we did out here yesterday is this. So you had a sideways move today. We did 71 million shares. The 209.35 was the benchmark. Yesterday, you get above it, you close below it, you have lighter volume. Today, you close above it. What does that say? Guess what? Over and over again, it's saying now the 210.63 can get tested once again. Each and every time we're up here, by the way, you don't have the juice, the power is not at the highs. The power is all at those lows of the consolidation that we're in, and that means that the essence there at 209, we're talking about 198. We're talking about 198. We're talking about 197. Those three lows were generated in December and January of this year. The NDX 100, we take a look at the three Qs inside the NDX 100. Now, what you have with the NDX 100, that couldn't get out of its way, and you had an expansion with volume as it moved to lower price. Slightly lower, but guess what? It's subtle, but that's what you have. We made a high yesterday in the three Qs at 108.38 with 17 million shares. The 17 million was going against the March 25th high that had 41 million. You come back down today with 23 million. What that's setting up is that wants to run down to the 104.24 level, and we'll see what kind of juice it has as it gets into that level. Intel just came out with numbers. Intel closed at 31.49. That's trading up $1 right now. That'll help the NDX 100, no doubt about that. The numbers on Intel go like this. The estimate was 40 cents. They made 41. The revenue, let's see, their client computer revenue was down 16%. Their data center revenue was down 10%. That's pretty intense, actually. Bottom line is that it looks like the revenue's down. They made the numbers, but right now it's trading up $1. Gold contract. What do we have with gold? What we have with gold is this. And this here is going to get challenged, I expect, pretty quickly. The gold market out here today went to 1183, rejected price, closed out at 1192.60. And this is where this gets wild, because 1192 two different things happened. We went into the April 1st day of strength. We never made the bottom of it. That's positive in a huge way. And what we also did, which is really positive, is that we closed 20 cents above the 1192.40. Oh, we're right at it. Oh, my God, I can't believe it. That's hilarious. We're right at it, actually. And where that level is, that's the higher range, folks. Bottom line, I suspect what you're going to see with gold, gold's going to make a run for the B point of an ABC structure in the way up. We'll see whether it has the volume. The last time we were up here, April 6th, it didn't have the volume to take it out. That's the 1224 level. Silver basically did better than gold today. Percentage-wise, no. But what you had, which I really loved what silver did, is this. Silver got down to $15.95, closed out at $16.16, got into the sign of strength, and closed over that sign of strength. And silver had dramatically lighter volume as it got into that sign of strength, where gold actually had more volume. But what gold didn't do is gold didn't break that swing, which is crucial to understand. So the silver market did 43,000 contracts. Those 43,000 contracts will come into the April 1st level of 60,000. So that is positive in a huge way. What wasn't positive, and this is if you're listening to the first hour, this is where we have some divergence out here. What wasn't positive is you had Franco-Nevada, Royal Gold, and Silver Wheaton, okay, that basically were pushing the lower end of their range, not with volume, but they were pushing it. And all three of those equities have to do more so with the actual physical price of the metal. Now, let's get over and take a look at King Dollar, because King Dollar, folks, to me, is number one. It gave away the most information. It did it yesterday. Got some clarity into what's happening with it. Confirmed that clarity today. And this is what it did. You made the high out there of 100.78 rather. You come off the high with volume. You tested the high yesterday with lighter volume, and you failed. Yesterday we did 46,000 contracts versus 100,000 contracts, 101,000. Today, what do? You come off that high again with volume, did 65,000 contracts. What that sets up a run down to the bottom of this consolidation. We'll see what kind of juice we get down there. Last time we were down into the 96.49 area, you did have volume contract at that area. So we'll see what it does when it gets down to that level. CSX just come out with numbers. This is one of the big train companies. CSX closed at $33.21. That right now is trading out at $34.40. And this one here, you want to watch this, because this is going to be wild watching how this whole thing shakes out. CSX, if we put this up, what you're going to see is that this had a nice comeback today. Norfolk Southern, NSC, came out with their numbers last night. Norfolk Southern had closed last night at a price point of 104.87. It opened this morning at 98. It goes to 97. Now it come all the way back to 100. But guess what, folks? It broke every swing point with volume. You did 8.7 million shares in Norfolk Southern. That does what? That says you're going to be right back down to that level. You'll get a little bounce. The bounce can even go to 104 in Norfolk Southern, and just sell the heck out of it. CSX, it's going to be the exact same setup. It's going to be wild watching this shake out, because it traded inside the same parameter that Norfolk Southern did. Yesterday it closed at $33. It opened this morning at $31.87. Came all the way back, but guess what? What you have out here is a high volume swing low. That's what you have happening. Now, it's going against, if we put this, when these broke topside, this is what they're going against, okay? And this is what, I'll be able to show you what slows this down immensely. If you take a look at CSX, it's going against its strength. The strength when it broke topside is right where it stopped today. The bottom of that is $31. $31 is where it took off in October. Has the juice there. Bottom line, doesn't mean it has to break that, but the way we traded out here today, it will test the lows of today. I suspect that this is the first time down that there's some real damage inside those rails. This is Tom O'Brien. This is TFNN. You stay right there, folks. We'll be coming right back. Dow Industrials up 59, Nasdaq's down 10, S&P's closed up 450. We're going to be right back.
If you're like me, you see the world's emerging nations as a very real opportunity, as these countries and their economies are developing right before our eyes. And you can rest assured that Everbank has spotted this opportunity too. In fact, they just recently unveiled the new 5-year market-safe Future Economy CD. This is a CD that could really deliver, but you only have until May 7th to take advantage. Consider the facts. If the future economy's currencies beat the US dollar over the CD term, you'll get all the upside. And should they lose, no worries. There's zero downside risk here, as you still get back 100% of your deposited principal. Intrigued yet? The May 7th funding deadline is quickly approaching, so hurry over to everbank.com/TFNN-CD for more information, including important product details and disclosures. Once again, that's everbank.com/TFNN-CD. Everbank is an equal housing lender and member FDIC.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, Nasdaq, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. And folks, as you come over to our website at TFNN, you're going to see a live options trading class with Tom O'Brien. I'm doing an option class. It's going to be tomorrow night, 5 to 6:30. You want to understand options upside down? Check it out. It's only $97, 5 to 6:30. If you can't make it live, it's going to be archived on your site for 1 full month. Now, as you're over there, you absolutely have to do this, folks, okay? This is going to be one of the best videos you've ever watched. And yes, my prejudice, yes, of course I am, meaning it's one of my talk hosts, okay? It's our man, Mr. Dave White. He put together a spoof on Janet Yellen about interest rates. It's right under breaking news. You gotta check it out. I mean, it is so cool. It's amazing. Check it out. Send it to your friends. Now let's go over to our man, Mr. Andy Hecht, as we do each and every Tuesday. Why? Because Andy, number one, has an outstanding program. It's on every Tuesday, Thursday, 5 to 6 Eastern Standard Time. Also got a great newsletter. The way you get the Technomental Commodity Report is you go to TFNN, you hit newsletters, you hit trading newsletters. You can test drive the Technomental Commodity Report right here, right now. Andy Hecht, what's going on?
Hey, Tom, how are you?
I'm doing great, man. How you doing?
I'm doing good. I love that video that Dave did.
Oh, my God.
It's awesome.
I'm telling you, man.
It's awesome. He actually sent it. He sent it over to me while he was working on it, and I gave him some. So we kind of.
Yeah, Muffin Jeff.
It was awesome. It was
Muffin
awesome.
Jeff. I know.
I put it out on Seeking Alpha today, and they accepted it. And believe me, they don't accept a lot of stuff, but they liked it a lot.
Listen. It's so professional, folks, and it's so funny.
It's amazing. He did listen. I mean, technologically, that guy is unbelievable.
Oh man, it's great. It's hilarious.
Terrific. It's really good. It's really good. Lots more of that stuff to come.
I know, man. I'm digging it.
Lots more of that stuff to come in the future.
I'm telling you.
So, commodities.
Yeah.
Well, I'm gonna disagree with you about two things.
That's
First,
all right.
The dollar. I think, you know what? Pullback, fine. Still, we're gonna have a parity party eventually. Dollar euro this year. That's my view.
Yeah.
That's not technically based. It's totally fundamentally based on interest rate differentials. That's number one.
Yeah.
And number two, until gold shows me something above 12 and a quarter, I can't get excited about it here. I think there's ominous signs in the gold market. I think the silver-gold ratio at 73 to 1 over that is telling us that silver's too cheap, gold's too expensive. I think the platinum being $40 under gold is kind of an ominous sign for the yellow metal.
Yeah, that's been staying there for a long time. That's an interesting one.
That bothers me.
Yeah.
That bothers me a lot. Unless Putin is selling off strategic reserves of platinum and palladium, which I don't think they have too much because I sold a lot of their platinum and palladium back in the 90s.
Yes.
I mean, they might have collected some, but we'll have to wait and see how it shakes out. Listen, I'll be on board. Above 12 and a quarter in gold, I'll be on board. But right now, listen, the risk certainly is on the upside in gold because of all the geopolitical events. However, it's dribbling, and I hate it when it dribbles.
Well, fundamentally, technically, it acted correctly to me, okay? Fundamentally, what you have is that for having no inflation's seeping into this marketplace right now, which is pretty cool. I mean, that's why this morning, that's what that turnaround was all about,
Well, yeah. But still, grain prices, food prices are heading, unless you're talking about meat, grain prices are very low. Commodity prices kind of under pressure here. I see copper now below the 272 again. That's another one I don't like here.
Yeah.
I just don't like the action in the base metals here. So we'll have to wait and see. I also think that, hey, these things should be up today with the dollar down almost 1,000 points.
No, there's no doubt. There's no doubt about that.
We'll have to see. The markets will tell us what's right and what's wrong. Oil looks decent to me. $50 pivot point. I think we're up the upper part of the range here. I think this EIA report that came out today was kind of positive long term for oil. If you want to get long oil and hold on to it to 2040, they say that the price will be $140 a barrel. But
2040.
I'm a long-term trader, Tom. For me, that means 1 to 3 months. So that's meaningless to me.
Right.
Cocoa, nice recovery today. Back up above 28 40 level, so that's looking interesting. Coffee. Let's talk about coffee.
Okay,
because
cool.
I think there's an opportunity here in coffee.
Let's see. We're at 136.
136 a pound. Recent lows about 132 on the July contract, about 128.80 on the May contract. Nice recovery here. Sitting here. The ICO, that's the International Coffee Organization, they came out last week and they said that in 2014, there's going to be demand for 141.6 million bags of coffee.
Okay.
But by 2020, it's going to rise to almost 176 million bags. Coffee demand is going up. In China, traditionally, people drink tea, but that has been changing with the coffee shops popping up everywhere, Starbucks and the like.
Yeah.
And I think that is going to filter through, and demand will take coffee higher. It's a wild commodity. You got to buy it at pressure points when it looks bad. We held the 128.80. We're sitting around 136. We've seen this thing up to 2.25 this year. You know,
so
right
let
now.
me ask you this about this, because what is it must be an ETF, because my understanding, and you just kind of reiterated there, is that, and I have never traded coffee in the futures market, but my understanding is that, it's pretty tough.
It takes no prisoners. J.O.
But J.O. is in the equities market, right?
Yes.
Yeah, which is cool. See, this is what you want to do, folks. There's certain, right, let's talk about this a bit. I mean, there's certain commodities, right, that really people shouldn't be trading. Coffee's probably one of them. But there's nothing wrong with trading the J.O., right? I mean,
no, nothing wrong. And actually, just because coffee's so crazy, I tend to like to trade in the money options, which, you'll probably talk about tomorrow. I like to kind of, if I'm bullish, I'll buy in the money or slightly out of the money options. If I'm looking for leverage, of course, I buy out of the money options.
Chad Coco from TD Ameritrade, that's what his program is on today. Options on the futures. No, because what happens there, folks, is the defined risk. That's
exactly.
The key.
You pay $100, let's say $100 a contract for an option. You can't lose a penny more than that.
Yeah, no, it's cool. No, I'm with you. Right.
So and hey, the liquidity is not great in the JO options. However, you can't chase it. You put your bid in, you wait till it gets hit. Eventually, they get hit because it's a very volatile commodity. Where these markets get you is when you chase it. Last week, for example, in my service, I had a recommendation in a JO option.
Okay.
And it took 4 days to get filled.
No,
but
eventually... I'm looking at there's not liquidity. I got it. Okay.
No, there's not. Yeah. But once you're in, hey, you have no risk. And you know what the beauty is? If you're buying in the money option, you don't have to necessarily sell that option. You can trade the JO against it, and there is liquidity there.
Oh, No, I'm with it there.
So like if you buy the call and the JO goes up, and then you say sell the JO against it, it's the same as being long a put. You have no risk.
Right.
So it's a beautiful thing. So that's the way I like to trade crazy stuff like that. And Tom, when it comes to crazy, there's nothing crazier than coffee.
That's what I heard. Yeah, can you stay with us?
Yeah.
Awesome,
absolutely.
man. You stay right there. Andy's coming back with us, folks. In the break, go over to our website at TFNN, folks. Go into breaking news and go check that video out. You'll have plenty of time to listen to it. It's about 3 minutes, man. It's dynamite. It's going to say Janet Yellen, should I stay or should I go? Come right back.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC. Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. We had the Dow Industrials finished up 59, NASDAQ down 10, S&P's, up 4.5. We're talking with our man, Mr. Andy Heck. Don't forget, right after me, Tuesday, Thursday, folks, Andy's got an outstanding show. Get it right on your cell phone, TFNN.mobi. So,
want to talk oil?
Yeah, definitely.
Yeah, oil's interesting, man. It's funny. You're getting a lot more bullish things coming out now. It's funny. You look at the meter, Tom. Every time it's above 50, you hear the bull speeches. Every time it's below 50, you hear the bear speeches.
Yeah, you were saying that last week too. I know. It's really,
it's amazing.
And it's so close, folks. This is what's going on. The last time, I wish it tested it today. You know, that level of 55.37 from that high that was generated the 7th. I mean,
Yes.
that's my benchmark, man. If that can't handle that, test it with lighter volume, I'll sell it. You know?
Right, exactly. And I think it'll be a sale up there, up near there, because quite frankly, I think we're in a range, and I think there's so many things pulling at the oil market. On the bullish side, we have what's going on in Yemen, certainly. On the bearish side, we have U.S. production, okay, right now, but U.S. production is going to come down because of the rig counts. On the bearish side, we also have, this Iran deal. If this Iran deal does go through, there's going to be more crude oil sold into the market. Sure. And we're seeing that in the Brent versus WTI spread. I wrote an article. I wrote a lot of articles this week, but I wrote an article specifically about the Brent TI spread and what it's telling us.
Okay.
And at $5.20 premium for Brent, which is down from $8-9 just a couple of months ago.
Sure. And it used to be about $13 last year, right?
It was $28 in 2012.
Yeah.
So,
okay.
That's telling us that, hey, Iran might come online and sell a lot more oil. So you have bullish and bearish factors pulling at the oil. The other interesting thing that's bullish now is that the contango in oil, the term structure, difference between nearby oil and deferred oil, has gone from 25% for 1 year down to 12%. And that is a positive, that's gone along with price going up. The contango has come down. So we have bullish and bearish things pulling on the fundamental side, pulling crude oil in two directions, and that's why I maintain the pivot price for active month NYMEX crude oil, $50. We're now rich. I think it's rich right now.
You know what? I love markets like these, man. I do.
They're trading markets.
Well, what happens, folks, is this. And, when you get something that either goes up really quick and then you consolidate, or down really quick and consolidating, there's a lot of opportunities, man. And what happens, it's always at the highs or the lows. It's either going to make it or break it. That's bottom line. That's it. It makes it or break it, right?
And Tom, right, it's April. We've been consolidating. Listen, we made lows in January.
I know.
We've been consolidating now for months.
Right.
And it's still the #1 story, and everyone's interested in crude oil. The shock hasn't worn off. But you know what? The market action is kind of over in crude for now. As far as I'm concerned, I don't see any really big move coming here. But the shock is still on the upside, because what's going on in Yemen, if that spills over, they share a very long border with Saudi Arabia. If that spills over and we see a oil field get bombed or something like that, then all bets are off. And if you look, I have a chart up here. If you look at open interest in the crude oil, it's very, very high at 1.7 to 1.74 million contracts. That's pretty high when you consider back in December we were at 1.4 million contracts. And let me tell you something. There's a lot of shorts in there, because a lot of people are still on the short side of this market. So I think that the surprises come to the upside in crude.
And of course, what ends up happening, folks, is that crude is a great vehicle to trade in the future market, folks. But what does happen is that, a point is a grand, okay? So the bottom line is that you start moving over $56, you're going to have people close those trades so quick, it's insane.
They'll run for the hills, and that'll bring it up to 62, 63 bucks.
Like in a heartbeat, right.
Like in a heartbeat. Listen, I remember in August 1991 when Saddam Hussein marched into Kuwait.
Yeah.
Price of active month crude was $20 a barrel, and in 10 minutes it was $40 a barrel.
Oh my God!
And you know what? I mean, that is the kind of thing that is. These are not crazy scenarios today, given what's going on, in that part of the world.
No, it's not. It's
just not a crazy scenario. Is it going to happen? I don't think so.
Let me ask you something. At that point, right? Had crude ever traded at $40?
Yes. 41 was the high. 41 was the high.
So this gets bizarre then. So when we look at crude, you got to take into consideration that crude is traded at $140.
That's exactly right.
Which is crazy, but bottom line.
Anything can happen.
Yeah, right.
Anything can happen. If they, we still import 30% of our oil in this country from abroad. It's not out of the question. It's not out of the question.
It's wild when you think about it, how I guess all our time spans, and thank God, you forget things, man. I mean,
Yes.
I'm looking at this chart, and crude folks is trading at 147. It's like, man.
You know what's important to forget? It's important to forget your good trades. You got to remember your bad trades because they keep you out of trouble in the future.
They do. There's no doubt about that. Yeah.
And the bad ones are very memorable.
Yeah, they are. They are. And just so you can get some confidence in this, folks, what does happen over the course of time, those bad ones that could really hurt you, they get way, sometimes it's at the beginning, they're probably every couple months. Then they turn to 6 months. Then they turn to a year. Then they only turn once every couple years. That's kind of how the thing goes, so.
Let's talk for a second about nat gas, because that's an interesting one. We went through the support last week. We're trading down at 252.5 per million BTUs on the active month May contract. Very interesting. I don't know if I mentioned this on the show last week. Stop me if I did. I met with a guy in Dallas last week who told me that in Houston and in Dallas, he's lived there his whole life. He said he never felt as many earthquakes and tremors as he's feeling now, and he thinks that's coming from all the fracking.
Yeah, no, there's no doubt.
And that's one thing. Listen, natural gas right now it looks like it's going to 220, maybe even $2.
Yeah, no, you get that.
Technically.
Now listen, that high volume low yesterday, 252. In fact, this is an ABC down. Let me hold it 1 second. This is.
Yeah, it looks ugly.
Your A point, man, it's an ABC down. Hold, let's see what we got. A is 362. B's, that's not bad. Yeah. Oh man, no, I got $2.
Yeah, $2 is about $2 is around the target here. I'm not so sure it gets there. Listen, the rig count's dropping is not necessarily bearish.
Well, did you see that Baker Hughes is not going to bring out their rig counts anymore? That's what the big companies are starting to do. They announced 2 days ago they're not going to do the quarterly rig counts anymore.
Okay, not the weekly. You mean they did weeklies on Fridays?
Well, Baker Hughes, I guess, did quarterlies, but they're not gonna. And Baker Hughes maybe that's oil, right? I'm not sure if it's.
Yeah, it's oil and gas.
Okay.
Because when you're drilling for oil, there's some gas there too.
It's big time, yeah.
Right. Big time gas. A lot of that's burned off, but no, it's what? Look, there's going to be. We all know that rig counts have dropped dramatically since November.
Yeah.
There will be a lag. We're at 9.65 million barrels of production. We, Saudis and the Russians, are the biggest producers in the world now of crude oil, but our numbers are going to tail off in the coming months, no question.
Yeah, no doubt.
So, interesting markets here, but quite frankly, I was talking to Dave White this morning. Looking at these markets, it's kind of like watching paint dry. Nothing too exciting.
It is. I'm getting a little more excited about them because I kind of like how they're trading, but it's still going to be a patience game here.
It's a patience game. No question. It feels. It almost feels to me like we're in summer. Isn't that strange? It's kind of summer market kind of trading for me. Watching these things, they're just trading back and forth, and I think it's a function of the fact that 2015 is a year for trading, not a year for investing. You can't really get married to anything here because the currency volatility is affecting all markets.
It is. The currency's a big deal, man. I think
it's a big deal.
I think the currency's going to rule the roost here. So, we're on different sides of this dollar, but that's what I particularly like. I like how that thing is trading.
Yeah, it's trading volatilely, but it's going to come down to the Fed, and if they even do a symbolic rate rise this year. I think that's going to add some legs to the dollar, and that's where we'll get parity. And then from there, that's been my target all along. We're fairly close. We got down to 105.39.
I know.
It's a great time to go to Europe. I'm kind of thinking of maybe this summer heading over there because,
I think we need
quite frankly, it's a perfect time to go because it's cheap.
I think we're going to have a tiger meeting in the Amalfi Coast, man. Go out
no,
to
the other side. I would go to like Pisa and the Tuscany.
Yeah. Oh, Tuscany. I've never been there, man. I could get my head wrapped around there.
Stay in a little chateau, drink some wine. It's a beautiful place.
Yeah, totally.
Beautiful place. Nice art. Beautiful. Very green. I love it there. But it's a very good year to go to Europe. And if you're planning to go to Europe, you could open one of those Everbank accounts and lock in your euros that you're going to spend.
That's so smart.
Right now.
Seriously.
Right?
Seriously. Listen, man, thank you so much. We really appreciate it. We look forward to the show in another 15, 20 minutes.
Excellent. Talk to you soon, Tom.
Cool, man. Thanks, Andy. Have a great one, man. Have a safe one. You stay right there, too, folks, because we'll be finishing up here in 15 minutes. Our man, Mr. Andy Heck's going to be coming up with you, growling and prowling with you. This is Tom O'Brien. This is TFNN. We'll come right back, folks.
platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Each and every time that the dollar ticks higher, S&P wants higher price. Each and every time that the dollar's ticking lower, guess what? S&P wants lower price. Dollar, the metals, and the S&P are going tick for tick.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. Join Andy Hecht as he shows you how to make money in commodities. The Commodities Hour, next on TFNN.
Tom O'Brien.
Welcome back. We go over and take a look at the Biogen, folks. Biogen closed at 423. It's trading out at 433 right now. And this wasn't on an earnings release. They're gaining on a data release on their anti-lingo drug. Bottom line is that if you look at Biogen, don't be going over there buying it, because what you have with Biogen is this. This little baby came off its highs, and it was, the high that was generated out there got to the 480 level. You're at 423 right now. This is going to be jamming right into the 431 to 450 area where it come down off. So it's going to be interesting watching how it hits that swing point. The swing point is 437. It's up $10 now. Hopefully tomorrow morning we'll hit that level, because at the swing points, folks, that's where the markets talk, walk, and squawk, and that's where basically either going to make it or break it. That's what it comes down to. We go over to Intel. Intel had come out with numbers. Now, Intel's struggling. Intel closed today at 31.49. It's trading at 32.10. It was up as much as 32.50. But when you take a look at Intel, what you have happening is that you came off the high of 38. You're at 31.49. We already broke the 29 level, and we did that the week of the 27th of March. That little baby's going to basically try to get down into that level again. In fact, watch this. This is actually Intel's, let me see what the price projection was. Intel was a beautiful ABC down. The A point on this is 37.90. The B, 32. Oh, that's not bad. That's only $5, which gives you 29. I see what it did. Okay, so check this out. So Intel did an ABC down, right to the price projection, too. When that got down to the $29.31, it was 29 something. That was the price projection ABC structure on the way down. Okay, so what happens when you do an ABC down or an ABC up? You're going to do something other than that right away. What Intel's doing is building another ABC down. Or what you have is that Intel tried to get into a high today, 39 million shares versus 215 million. This is going to be intriguing watching this baby play out, because it looks like Intel wants to trade down to the $27 area. And where I'm getting the $27 area is this, is that if we take this, we put this on a weekly, what you're going to see lined up is you're going to see the week of January of 14. Let me pull this back. Where is she? January 14. That little baby's sticking out like a sore thumb at $26. Yeah, there it is right there. 27.12. That's where this thing wants to lay out to. It'll get some support at the $29 level first. That was the highs of 2012. But the way that is shaking out and playing right now, that's exactly what it looks like it wants to do. CSX, that had come out with numbers after the close. That's trading at 34.18. They basically made their numbers. But what you have with CSX, folks, is that you have high volume low just from today. The rails out here want lower price. They've broken down. We'll see if they can break. When they went topside with the vengeance. So it's going to take a few more times down at this $30 level in order to basically get to lower price. What seems to be happening is that many of the transport stocks basically struggling. That's what it comes down to. FedEx today was down 163. UPS, we take a look at UPS. Where's UPS? UPS was flat. Bottom line is that those transports, they had come off their highs, and they come off their highs with some real juice on the way down. Google is the big number, folks. It looks like they're selling Google away today. More than likely, fundamentally, I guess they're selling it away. It was down $8. They're selling it away because it looks like the European Union is going to basically trying to get them for basically a monopoly position. So we'll see how that shakes out. But Google itself, it took out that B point today, took it out with volume. It closed above the B, but when you take a B point out with volume, most of the time it does, it turns into a complex ABC structure on the way down. what that would mean is that you get a little bounce. The bounce is on lighter volume. What does it do? Ends up coming right back at you on the way down. And Google, by the way, was one of the first stocks to take out its October 15th swing low with volume. The October swing low with Google was 518. It basically took that out in December. And in December, what does it have? It has another high volume swing low. So Google basically is leading the market going south. That's the way this is shaken out at this particular point. Walmart, for some reason, Walmart still can't get out of its way. That one's going to be really intriguing because it's like, is another, bigger grocery store going to take over Walmart? We'll see. Bottom line is that either that or the whole market's going south. Walmart, October 15th swing low, $72.61. You're at $80. These October 15th swing lows are so much lower than we are. It's like amazing, and that's not so much the amazing part. The amazing part is that there are so many equities that have already traded down into those levels. So your probability that you're going to get to those levels go up dramatically. We'll see whether this is going to be the quarter that happens, or in fact, is it going to be when the Fed decides that they have to act. The way the bond market is trading, folks, is that the Fed might want to act, but it's guess what? The 10-year is at 1.8. With the 10-year at 1.8, you get a 30-year mortgage at about 3.8, 3.85, and these bonds look like they not only want to go topside, they look like they're going to take out the B point of an ABC structure on the way up. Now, what's so cool is this, folks, is that we're really close right now to the top of the 10-year bond. Let me pull this up for you for a second. If the 10-year takes out the B point and does it with volume, right now we're at 129.10. If you take out this B point, the B point on the structure is 130.04, which we were only 1 point away from it today. We did 1.1 million contracts. If we take that out with volume, you know what that does, folks? That's going to blow away because the A point on this is 125.29. So let's call it 126. The B is 130. So you get 4 points. That would bring it up to 130. Oh my God, that's funny. No, 133. It would bring it up to 133. And 130.20 is the high in the 10-year. You take that out, what that sets up is a much larger bond market. It sets up a much smaller yield, and you're off to the races, man, because there's more people that basically have shot this bond market up here than anything. You stay right there, our man, Mr. Andy Heck's going to be coming up, growling and prowling with you, and always remember, whatever you think about, you bring about, whatever you focus on grows, and whatever you want in life, folks, visualize it like a nice big motion picture. Step into it, take ownership of it, fly with it. Thanks for being here, folks. Have a great night, safe night. Stay right there, our man, Mr. Andy Heck's coming right up. Go get him, folks.